We have seen extreme volatility in the Treasury space with the 10-year yield back below that 280 level as we head towards the U.S. CPI numbers. This chart on the Bloomberg showing how the expectation is for perhaps a little bit of easing in the headline numbers. What are the markets thinking where inflation is going from here? And what do you think is actually going to be the outcome and where the Fed goes?
Yes, good morning, and difficult questions to answer. It looks like the long end of the yield curve is expecting inflation to come down and come down quite rapidly, as is the break-even inflation rates implied in the US bond market, whereas the short end of the yield curve is expecting the Fed to have to continue hiking aggressively to make sure that occurs. So the long end of the yield curve is sort of dancing to the lower growth outlook, whereas the short end is dancing to the higher inflation outlook. So that's caused the yield curve to invert to levels we haven't seen for 40 years or so. We're not inclined to fight that curve position at the moment, but that break-even trade where the market is expecting inflation to come down quite rapidly into 2023, we think that's a little overdone at these levels.
I talked about volatility in the Treasury space, but we're really seeing it all across the board, right? When it comes to Australian bond futures, they're near the most volatile in a decade or so. What does this do really to the investment portfolios of people who really wanted some safety in their retirement, for people who really wanted some really regular income? Does this really change the investment outlook for a lot of people out there? What are the risks?
Yes, the higher volatility means that the amount of return or risk that you get from a certain sized investment goes up. So naturally, whether you're a retail investor or a hedge fund or an active bond manager, you almost have to reduce the size of your positions to cope with the higher volatility. So that higher volatility leads to lower risk or lower position taking, which generally results in lower asset prices overall. So a balanced approach to investing, trying to blend a mix of growth and rate risk is probably the best outcome in this volatile environment, with a holding of cash to take advantage of selective opportunities.
Brad, where are you finding opportunities outside of Treasuries at the moment? Do you have any geographical preferences?
You mentioned the Australian bond market and then the Korean bond market, for example. Both those central banks have begun to act relatively aggressively to contain their inflationary pressures, and we don't think inflationary pressures in those markets is going to be as intense as what we've experienced in the Eurozone, the UK or the US. So potentially being sort of overweight those markets relative to other markets is an opportunity. And also within Asia, we also have some central banks who haven't even begun that tightening cycle. We're likely to see the Bank of Thailand tomorrow. Most market expectations are for a 25 basis points increase there. Perhaps wouldn't surprise us if they went 50. So again, being underweight markets where they're just beginning their tightening cycle relative to markets where they're well advanced in their tightening cycle is an opportunity for us.
Liquidity pressures haven't really come to the fore in terms of being a massive risk, but are you starting to see that change?
You're right, not yet, but if you look at the amount of turnover and volume that's going through, even in the US bond market, again, that's at historic lows that we haven't experienced for some time. So I think if we do see another bout of risk-off or volatility, then the reaction in bond markets and equity markets could be more intense than what we've experienced previously. And even now, looking at the daily range in US Treasuries relative to what's being expected because of outcomes of payrolls, etc., they're actually higher than what you would expect. And that's due to a lower level of liquidity across the board.